goal with this Friday's expiration unless you're able to sit in front of your computer and do some intraday trading. On this one, I would definitely go way out to next week following the option rules. Now, if this trade was taken on, this might be a little bit rougher simply because to make this a safe trade, it would be best to have our stop inside of that box, being that we're playing it because it broke outside of the box. And that happens, and that's right below the low of that same candlestick. So that's about $1.60. You'd have to be willing to place at risk. $1.60 at risk. And don't forget, that $1.60 depends upon your delta. If you take on a 70 delta, you'd be losing about 70% of. If you took a 70 delta, you'd be losing about 70% of that $1.60. So we could be a little bit more conservative and tuck that right underneath the open of the body. I don't know if I like that. It all depends on a person's account size and your tolerance for risk. Otherwise, I'd be tucking it right in there, right around 1830. So that's where I personally would place it. All right, so that's McDonald's. I took a look at Caterpillar, and Caterpillar's got a couple different things going on. We could, because we had a breakout, Caterpillar took a little bit of a rise above these levels over here. Now, that would probably be equal to this close. So let's take a look and see how accurate I am with that assessment here. I would want to take the top of these levels right here, or excuse me, go to the high. There we go. And it closed underneath that. So it did not, however, and what's important here is it tried to come underneath this support level. It tried, but couldn't do it. It pulled back up and closed above it. So that tells me that we could be a little bullish. So if it surpasses tomorrow, if it surpasses today's open of 72.30, then I would go ahead and take a position. Now it's about $2.60 to move to the upside. The stop would have to go, I don't want to go way down here, that's too darn low. But these two little small wicks, that's where about I would set my stop. Now I like kind of going over this for you guys because this is hopefully helping you think through how to evaluate where to take your entry points and where to perhaps set your stops. I'm going to make this 45. I want to give it a little wiggle room. Okay, now I didn't check to see if there's any money, but it is possible because we are tucked in so close to the 72 that we could actually do maybe a 70 put and a 67.50 put. In other words, sell, buy for this Friday. I doubt if there'd be enough money, but if it's moving up quickly and a person could get in, and if there's more than 20 cents, then that's a possible trade for this Friday. Because you only have to be concerned more about Thursday because of the time decay from Thursday's close until Friday's open. So that's a possibility, but I don't think there'd be any money here. I don't think so, and I didn't take the time to look. So I like the idea of the call. And on this, I would probably do not this Friday's call, but next Friday's call. And here at the Titanium in Chicago, we're going to show you how to take better positions. For those of you that are going to come, we're going to show you how to take much better positions and to protect and to hedge at a much better risk situation. In other words, to manage with a lot less risk with more return on your buck and pay less for it as well. But that gets way too involved to even discuss here. But those of you that will be at Titanium in Chicago in April, this is going to be quite interesting. You're going to see how to handle these types of trades at much better, more professionally. So those of you that are not coming, you might want to consider that. Okay, write to support at mastermindtraders.com. All right, now here's something we could do too with Caterpillar. This is on my kind of I don't know-ish list. So if it does not trade up tomorrow, if it trades down, I'd want to close underneath this support. So support then would become resistance. Then I would wait into maybe next week. I would never take a Friday and hold a long position over the weekend, but I would wait for a close and then maybe Monday or so take a position if it goes down below that level. So that's just a thought. All right, and so we went over 3 or 4 bullish trades here: Apple, Facebook, McDonald's, Caterpillar. What about if the market's bearish tomorrow? Well, if the market's bearish tomorrow, I'm not going to do any of the trades we just discussed. I need to look at some bearish possibilities. One of them would be Goldman Sachs. So Goldman Sachs has some pressure to the downside, and if Goldman Sachs broke that 149.20, that would be a put entry. And what I would do is buy the put there. Now the safest place, and this is a little on the risky side, is to put my stop way up here. But boy, that is really up there. Okay, so you really have to have a $2 or $3.30 risk tolerance. That's a bit high. To be a little bit more conservative, a person could place the stop right around halfway through that body, right around maybe say 160 or 151. Excuse me, 151. So the stop could go there at that 151. Problem is, at that level, it would be very easy for the stock to go up and smack the 151, take you out of the trade, only to head down again. So the lesson in this is to be safe. I mean, you got to give a stock some wiggle room. And if this is too much risk or too much to lose, then this is the trade you don't do. But it's a good lesson to practice. You take on the smaller trades like the Apples and the Facebooks. All right, so Goldman Sachs would go on my bearish list. Another possibility is AIG. And taking a bearish position below 51.40, and my stop would have to go, here's the safest place for it, but that's a little risky as well, and that would be about 70 cents. It's not, I shouldn't say it's risky, it's a safe place to put it, but it gives the most wiggle room. Now, this is a good place to place it, but this is not where I'd recommend to place it. If I was going to recommend any place to place a stop, it would actually be right above that 10 moving average. That makes it a lot tighter. If I were playing it, this is where I'd set it. But this right here, right around 52.10, maybe even 52.05. So 52.05 is where I'd place a stop, and I'm just going to set that up there as well. 2 different stops. All right, so that'd be a good place. Either one of them. The 52.75, of course, gives more wiggle room for the stock to move. And the interesting thing about AIG, AIG is just one of those wicked stocks. I don't like the idea of all these wicks. See all these wicks? These wicks can just go up and smack out your stop and then head down right off the bat. So this is a stock that you got to be very cautious with. Always look to the left. Try to look at the behavior of the stock historically. All right. So what we have so far is, let me grab a different colored pen. We've got some bearish trades and bullish trades. Arrow down is my bearish trades, of course. We've got Apple. We've got Facebook. We've got McDonald's and Caterpillar. And then Goldman Sachs here in the bearish trades and AIG. All right, so what happens if tomorrow the markets are bullish? If the markets are bullish tomorrow, what do we do? Well, we don't even consider those. Now, the thing about Goldman Sachs, however, Goldman Sachs is a financial. Goldman Sachs does what Goldman Sachs wants to do. So if you were able to sit in front of your computer and the market was going up, Goldman Sachs will do what Goldman Sachs wants to do. It could still go down. So being a financial and a little bit on the radical side, sometimes Goldman can be, you could still trade it down in an up market. If the markets are bearish, I'm not going to do those. I will do those. Okay? Now, something here as well. If the market is bullish, I will trade bullish markets and an aggressively bearish market. Because if the stock goes down in a bullish market, it's got probably a darn good reason why it's going down. If the markets are bearish, I will trade the bearish markets, but I will not trade it bullishly. Okay, so you kind of see the difference here. In a bullish market, I will trade either direction. I prefer, however, to trade bullishly. But if there's a real good candidate like Goldman Sachs, then I would trade bearishly because it's got a good reason why it's going down. But in a bearish market over here, I will not trade bullishly. Okay, not usually, not to hang in for a while. All right, so there's a lot of extra thought there. Now, again, this is going to be the last time I go through all these candidates. I suggest if you do not already subscribe to the Trade Alerts to go ahead and subscribe to the Trade Alerts. And from this point on, I'm going to be running minimum of 10 to 20 of these a month. And, you know, it's not hard to get that many. Right now, we just got done doing 6 trades. And if I could do 6 trades every few days, we'll probably end up with closer to 20 than we would 10. So from now on, these trade videos will be on the Trade Alert Facebook page. And, of course, you would have to be a subscriber to the Trade Alerts to view these. Now, I will still continue to do market insights and evaluate the market, but not giving an assessment of some of these trades. And just kind of a heads up, a lot of people have been asking about intraday trading. This is about the last opportunity you might have to do that if you want to do it, simply because as of May 17th, I'm taking a break. So you have to take the course right. You can always take the course.